Welcome to another edition of Before the Bell, your home for actionable pre-market content. Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, March 9th. It's 7:14 as I'm starting the video. Quick look at futures. Bitcoin's up 10%. There was some kind of news release out of the White House. I don't know how much accuracy, relevance, lasting, staying power it has, but markets certainly liked whatever they had to say. Oil is down about 2.5%. I think it's like the first red day I can remember in like 2 weeks. Copper off 2%, gold down 1%. Equities are up about 1.5 to 2%. Over on the macro front today, we've got oil inventories at 10:30 and a 10-year bond auction at 1 p.m. Earnings, Zim, marine shipper, reports before the bell. After the bell, CrowdStrike, Franco-Nevada Mines, gold miner, after the bell. You can go on the blog and get the complete list. And don't forget to run your player at 1.5x for the video. And a personal note, I have an appointment this afternoon. I'll be off the desk after about 1 o'clock or so. So don't expect to hear from me the rest of the afternoon. If there's something monumental that happens and things change on the chart, I will certainly send out an after-market note to tell you what I see. Okay, I spent a lot of time last night kind of thinking about all the things that have been going on. And I think what we're in the midst of is a massive, massive paradigm shift. One that could not only last, through the end of this year, but for years to come. I'm not going to go through every line, but there's about 10 or 12 things that I point out here that I believe are shifting. Most of them center around energy, but also the liquidity and interest rate environment. Remember, this whole thing started, when I say this whole thing, market year to date, was the prospect of going into a rate hiking cycle, which we know is particularly tough on growth names, and tightening financial conditions. And so then we had the Ukraine flare up. We haven't even the FOMC is next week. We have no idea. I think there's a really good chance that CPI is going to print with an 8 handle on tomorrow, on Thursday. Probably an outside chance, but not zero, of printing a 9 handle. And we don't really have any idea. I mean, Powell has talked about, a 25 bip hike, while Bullard and others are gunning for a 50 bip hike. What happens if we get an outrageous number tomorrow and then Powell changes his mind mid-course and goes 50? That's not the base case, but you got to put it out there. But what I wanted to so I encourage you to go on the blog and take a look at that stuff and consider the ramifications of what I've laid out here. Let's take just one quick example, oil. There was a headline yesterday which caused a rip that the Ukraine is no longer insisting on a NATO inclusion. Seemed like a big concession, when it happened, and the market got a big lift out of that. And then, but when you look over at oil, it hardly gave up anything. So what is that saying about oil demand? And on these Russia sanctions, whenever the conflict ends, do you think all the Western governments are going to say, okay, wow, glad that's over with. Now you can just, is McDonald's going to open up all its restaurants again? Is it all just back to normal, like in 2 weeks, all the sanctions lifted? Or is it going to be like an Iran situation where these sanctions go on for years into the future? I don't know. I don't think they end in 2 weeks. I think the West will selectively, if it's in their best interest, to buy rare earth metals or any of that kind of stuff, I think they'll figure out a way to politically maneuver to do that. But I don't think the overall sanctions are going to be lifted anytime soon, especially if it drags out for a while. So I think the energy and commodity markets are going to stay tight. And I wanted to show this to you in terms of fund flows and energy. Energy is already up 50% since the beginning of the year, after a big year last year, but still only comprises about 3% of the S&P in terms of market cap. So here's the rough weightings of the different sectors, and you can see technology dominates at 29-30%. We know those top 7 companies are, for all intents and purposes, the market. 40% of NASDAQ and 25% of S&P are those 7 big names. So my point is, if you're an asset manager, what are you always thinking about? Well, the first thing you're thinking about is what are the ways I could get fired, right? How do I lose my job? And so you look at the performance year to date, and technology that's been a gravy train for 15 years. Throw your money in Apple and Microsoft and all those names, Google, and you just sit back and manage it around the edges. But you got your core that just outperforms year after year after year. And so you kind of have a easy ride, few bumps along the way, but more or less an easy ride. Well, in an environment that we have on the horizon, that could change. Tech is lagging. We've shown over the last couple of weeks how QQQ is underperforming SPY, and when you get that dynamic, that is not good for overall market conditions. So you're looking at the performance chart, and you see that energy is outperforming, and you haven't bought energy in your whole career. I mean, literally at 2.6%, 2.7%, you don't need it. It's more of an aggravation than it's worth. But now, do you want to be the guy that underperforms the market and not have any energy? That's how you get fired if you don't adapt your asset allocation. So I've got this picture here of 1 million sheep trying to get through a 6-foot gate. I think that's what it's going to be like with energy, and it started already, and I don't think it's going to stop. You got a huge amount of funds in tech and these other market segments that are all going to start trying to funnel down into, trying to get through that 6-foot gate of energy. I mean, Chevron was up 6% yesterday. That's one of the biggest companies in the energy space by market cap. And I think that's just big fund managers saying, get me some energy. I don't care if it's up, 20% on the year. Get me in the name. I got a March quarter I got to report here in 3 weeks, and I don't have any energy. So get me something. And I think that's the dynamic that we're going to be in for a while, that assets are going to flow out of the things that aren't working and going into things that they've literally never owned in 10 years. So take a look at that. See what you think. Leave me a comment. Shoot me a note. I'd love to hear what you guys think of the paradigm shift that I think is going to be happening. Moving on to the charts, we had a lot of volatility yesterday, and that's about it. I mean, really, the pivots haven't changed. I'm going to run through them for you to show you where we're at. So with volatility, with the VIX, trading 36 or whatever it's at this morning, that's just telling you 2% either direction is just vol. It doesn't mean, it could mean, but it doesn't necessarily mean that, oh my God, there's, we bottomed and, everybody get long or whatever. Or if we go down 2%, it doesn't mean, the end of the world. All you're seeing is massive volatility, just jacking markets. And I thought it was really funny yesterday. I made a point of it in the trading room. I was looking on Twitter, and this is right after that Ukraine trade, which squeezed me out of ARK and, the ARK shorts that I had on. Because you got to react, or at least I did, to say, okay, well, I'm not going to watch this positive gains just disappear. Who knows where the rally could go? And there was this guy on Twitter. Hey, everybody, I called the bottom. I got my team out at the right time. Now we're all long, and look at me. Look at me. Follow me. Because I'm so great, I called the bottom and got everybody long. And about an hour later, they were dwarfing that big rally. We rallied up and then we finished on the lows. So I'm thinking to myself, you idiot. All you did was watch intraday volatility whipsaw you. And we've all been victims of it. I'm not saying I'm any better than him. But in an environment like this, don't go popping off, because the thing you're going to pop off about is the thing that's going to reverse right about the time that you say it. Because right now, there aren't a lot of trends going on in the market unless you look at a trend like SPY that I have here. You can see that it's in a downtrend, but you also see massively large candles going in the other direction, that if you get caught short, when these vol rips happen, you get your face ripped off. So sit back, trade small. Don't go popping off like you thought you figured something out, because you probably didn't. While this high volatility regime is in place, and I think it's going to definitely stay in place through the FOMC next week till we find out what's going on. So onto the charts. Nothing's changed as far as the pivot here on the daily chart. Until you get a daily breakout above this downtrend line, I think you got to lean to the short side. SPY 2 hour, here was your intraday candle. Came right up here and failed. Closed on the lows. No real change in the pivot. Notice here on the 30-minute, I've got a downtrend line. Look at where the rally failed. Right at downtrend resistance. So all the bottom pickers were here and, went right up to the trend line and rejected. Now, if you're an intraday trader, that was great. If you can pick this bottom and get long and go up, $5 or whatever it was, $8, and get out at the top, I mean, you're barnstorming. That's a great day, and congratulations to you. I got some of it. I didn't get all of it. But if you're at your desk and you can trade that vol, by all means, trade it. Qs, sharp decline. You got your daily trend line to shoot against. Until you get a breakout over, 240, 242, I think you got to be very careful. Look at how the exponential moving averages are all heading down. And remember, we've discussed this full-on bear stack on the EMAs. Well, guess what? We just got it yesterday. What do I mean? The 50 is now below the 200, and the 20 below the 50, and the 8 below the 20, and price below everything. That is a full-on bearish stack. Full-on bear look. Now, does that mean it can't reverse today and start a rip the other way? No. But what that's telling you is this is a pronounced downtrend that's going to take a lot of time, work, effort, and buying to turn it around. 2 hour. I think you can use this 325 as your pivot. We got a downtrend line for you to shoot against. Here it is on the 30-minute chart. Notice it came right up to one of our pre-identified levels where the advance quit. So, and ending back down on the lows. IWM, already well established in a downtrend. Got the full bear stack that's happened, a long time ago. While it's in this consolidation, call it a flat flag, call it whatever you want. I think you got to lean to the downside, but be ready for volatility in either direction while this thing resolves. I think you've got to have an alarm down here at 187.50 at the bottom of the box, because you break that level, then you're going down to 170, as we've talked about many times over the last couple of weeks. Here on the IWM 2-hour chart, here was that rally, again, died at the downtrend line, and that's how you can, use that in your active trading. 30-minute chart, you see it right here. We had this important line pre-identified. Now it broke above for a touch up here towards 200, but that candle was quickly faded. But that's the power of having these levels already pre-identified. You're watching, if you're in that intraday trade, when price comes up to these key levels, and watching the candles in conjunction with the levels that they're at, anticipating a stall or reversal or even a breakout. It could have stalled here, but it didn't. So then if you were long, you could have moved your stops up to the next level, stayed long, and got that move up there. And then when you saw the stall out, you could either flip reverse or just simply get it for a one-way trade instead of reversing and getting it the other way. Facebook, just intraday volatility, closed back on basically the lows here at 190. So no real changes. You get a break below 187.50. We've already talked about 180 as being your next level to the downside. Here's another perfect example on the Apple 60-minute chart. So we come down. We had this level pre-identified. Large volume over price bar here. We had a prior low here. So we bottom out, and then we get the headline. If you didn't catch the low, don't be disgusted with yourself that you're a crappy trader. You're not a crappy trader. You look for the next opportunity. Recapture of 159, the old bottom of the gap. Where did it go? Right to the top of the gap, almost to the penny. 163 for a touch. Reversal, right back down. I mean, that is the power of these levels. If you're new to the channel, welcome. This is what I do for a living. I draw lines and set you guys up for success by having confidence in the levels that I give you, and then watch price action react at those levels that you can put on objective trades. I wasn't in this trade, but a couple of guys were in the trading room, and they got a nice round trip off it. I mean, you got $8 in 2 hours. You had a rip from 159 to 163, and then you got a reversal back down, not even counting if you just stayed short. But even if you didn't get the full 8, if you got 6 or 7 or 5 or 4, I'll take that for 2 hours work. I mean, that's a nice little trade. And if you stick to your TA principles and you are paying attention, you can have a trade like that. Tesla recaptured 830 yesterday, had a good day, 2.5%, moved up here. So your new pivot is 830. Same setup as we had back here. Your upside target is 860. Your downside target is 800 on a move away from this 830. Remember, the 200 is still above, up around that 860 area. So we are still on the wrong side of the chart and the wrong side of the trend line. So if you get that move into 860, excuse me, you can tell that's going to be a really important spot at downtrend resistance, at the 200, and at lateral resistance. So in essence, you've got a triple layer of resistance there. If it were me and I were in it and I got this move up to this line, I would book those profits and then recalibrate from there. What do I mean by that? Okay, I'm ready to go in either direction. Max flexibility at this downtrend line. If I were going to lean one way, you got to lean bearish. Why? Because you're at triple resistance. But if you get a breakout above 860, above the 200, above lateral resistance, above the downtrend line, you can take that long with quite a bit of confidence, knowing that price powered through it. And what would be a good sign of that is if it comes up to 860 and just spends a lot of time there, versus a one touch and reverse. When you get price hanging out at a big level for a long time, you got to really be on your toes, because that could be an explosive breakout in that type of situation. Look at Microsoft. Very much like Apple, in the sense that we made a morning low. It reversed on Ukraine. Let's say you didn't get the low, no problem. We had a well-defined level here at 278. Went right up to the level that we already had on the board here at 283.50-ish, where we saw multiple rejections just the other day. Came right up to that level, stopped on a dime, reversed. So right there you had, you had $5 in either direction. So that was a $10 move in 2 hours. Quite dramatic. Again, using levels that we already had on the board. There wasn't anything new there. Amazon, rally. Now, I put this trend line in after the fact, so that wasn't there. But we did have these intermediate levels already identified. So, that would have been one of your harder trades just because, the options are expensive and the move wasn't massively dramatic. But, if you were getting in and shooting long against 2,700, you got a $100 move in a single candle. So congrats to you if you took that. But remember the big picture, guys. This is bearish all the way. We've dropped out of a $600 trading range, well below trend, full bearish stack, 200, 50, 20, 8, price below everything, price at key support. And I'll just show you the weekly just to, reorient you. I think this thing is going to come down in the 2350, 2300, 2400 range. Could we get a kickback rally to 2900? Sure. But near term, I think we go lower on Amazon. There's certainly nothing in the charts right now to say get bullish. That's for sure. That doesn't mean you have to be short. All I'm saying is this isn't a place where you want to try and be a hero and go long because there's just not a lot there. And any volatility that you see is just that, volatility. It's not a big change of direction. Here on Google, again on the daily chart, home right in on this low here, about 25.25. You break below these prior lows, you're going to be coming down pretty fast. You can see we've got a large volume over price bar here at 24.25. So I think you've got a $100 move right off the bat on any break of the prior low. I'll go back to the 60-minute chart just to show you that. I didn't move these pivots. Your pivot is, we closed on the lows, so your pivot is going to be right here at, say, 25.35. That was the intraday low. Little whipsaw, came back. Again, I have not adjusted these levels, so again, you had levels to trade against, is my point. So that was certainly a opportunity there. Netflix testing the lows. You've got a pivot at 345. Going out to the daily chart, dropping down below this 360. So I see lower prices there. And SMH, another intraday kickback rally right to a key spot that we had on the charts, and then they faded it. So let's wrap it up there. Do a quick recap. Oil inventory, 1030. Bond auction, that'll be closely watched. 10-year bond auction today. We got a 30-year tomorrow. 10 Take a look at the paradigm shift write-up that I did on the blog. Keep in mind this volatility is just that, volatility. Don't read into any kind of 2% move that, oh my God, the whole thing is, going the other way, depending on how you're positioned. And I'll tell you, the P&L volatility has been, I don't want to say crushing, but it holds your attention. I mean, when things are moving, 2% intraday, you look at 10:30 and you're up, and then you look at noon and it feels like you're wiped out, and really nothing has changed except your P&L. Just watching that volatility go back and forth. So trade a little smaller, reduce position sizes and number of positions if the volatility is getting to you. And I think we'll start having a little bit more clarity after J-Powell next week and month end wraps up. So I hope you liked the video. This has been Chris Buss with Traders Profit Compass. Talk to you next time.